Disney Plus subscribers surpassed 73 million. Is it time to buy Walt Disney? And with that, welcome back to Investing for Generations, your channel for high quality stock research for long-term value investors. So Disney Plus just exploded to now over 73 million subscribers, and it's estimated in the next 4 quarters to reach almost the 100 million subscriber mark. And even better, with their other services like Hulu and ESPN, they are almost at 120 million subscribers already and on the way to catch Netflix, which have 195 million subscribers right now. And this brings me to my first video about Disney, where I also looked into the Disney Plus. There it say in a few short years Disney Plus has the potential to be a 30 billion giant. This was with an estimated subscriber mark of 100 million to 2025, and it seems like we could maybe reach 100 million subscribers even next year. So they are far ahead of that. But that's just the one side of the coin. The other side, of course, is that Disney parks are still closed because of the pandemic situation. And so the question becomes, is it time to buy Disney just because of the Disney Plus subscriber mark and remarkable subscriber marks? Because next to the great subscriber numbers for Disney Plus, Walt Disney reported an adjusted loss of 20 cents per share in the fourth quarter of the fiscal year 2020. This is beating the Zacks consensus estimate by 70.6%. The company had reported earnings of $1.07 per share in the year-ago quarter. It's the first time in 40 years that Walt Disney have to report an annual loss, but still it's way better than the expected loss. The revenue decreased by 23.1% from the year-ago quarter to 14.71 billion, but comfortably surpassed the consensus mark by 2.6%. The coronavirus pandemic affected Disney's segmental operating income by 3.1 billion. And so I want to go through different segments for the Walt Disney Company. And the media network, which is almost half of the revenues, grew 10.8% year over year to 7.21 billion. And the media network segmental operating income climbed 5% year over year to 1.86 billion. COVID-19 impact on profitability was roughly 500 million. Then to the segment of parks, experiences and products, which is most hidden by the pandemic. The segment revenues, which are 17.5% of the whole revenue of Walt Disney, decreased 61.2% year over year to 2.58 billion, with an operating loss of 1.1 billion. The studio entertainment segment, which is 10.8% of the revenue, decreased by 51.8% to 1.6 billion, and an operating income fell 61% to 419 million. And then, of course, last but not least, the direct-to-consumer and international segment, which is 33% of the revenue, came in at 4.85 billion, up 40.8% year over year. And there is, of course, the Disney Plus subscribers into it, and also Hulu and ESPN. And so overall, of course, Walt Disney is hit very hard by the pandemic with all the closing of the parks and the theaters. So overall, the picture is not that bright as if you look just at the Disney Plus and what happened there. And so we have to keep that in mind, and then of course have to think about if it's a good time to invest in Walt Disney. And so, as I said, Disney suffers the first annual loss in more than 40 years. I think it's not time to panicking, because the current ratio for Disney is 1.34, so the current assets are way over the current liabilities, so they can stand this situation and these losses for a while before it really got critical. But of course, sooner or later, also Walt Disney have to come back to make money, of course. But despite all of that, and despite of the first annual loss in 40 years, the shares just jumped up on Friday 2.1% to now $138. And I bought my shares for a little bit over $100 in April, in the depth of the pandemic of the first lockdown here in Germany. And in my first video, I calculated an intrinsic value for Walt Disney of $130. So I bought it a little bit under the intrinsic value, and that's fine. And now, of course, becomes the question, how does this rise of Disney Plus change this intrinsic value? And of course, for now, you could say, okay, they make losses, so how you can have a high intrinsic value like that. But hopefully, they will come back to normal, and then also to the normal earnings for Disney with all the different segments plus the Disney Plus subscriptions. And so I think the intrinsic value with this very good progress in the Disney Plus subscriptions um, is for me up around $150 right now. But this is all with the idea that sooner or later the world come back to normal and all the parks and theaters can open again. And so with the current price of $138, we are a little bit under the maybe new intrinsic value of $150. But for me, it's not time to buy even more. It's very uncertain what will happen, how last the situation will be, and so I will not add even more. But of course, if we have another correction or crash and the stock just go back to 110 or even under 110, then I think it's time for me to add even more shares to my position. And so overall, I think the long-term outlook for Walt Disney is good, is still good. It's a great company with great different segments, and with the streaming providers now and Disney Plus first and foremost, also they have a big share in this market. And so I think in long term everything is fine with the company, and of course even more when the world come back to normal. And with that, I also want to give you an insight, my weekly insight to my portfolio. As you maybe know, I'm one of the few YouTubers who give you insight to his real money portfolio every week. And first of all, I want to start with my received dividends for the last week, and this was from MasterCard, and this is just $3.06, very tiny, but at least something. And then another dividend from American Express. This was $14.25. And next to that, my portfolio in the last week just was rocketing after Pfizer reported that they are very close to a working vaccine for the pandemic. The whole market jumped up and my portfolio jumped even more up and really rocketing. And so right now I have an overall performance since the 2nd of December 2019, when I started this North American portfolio, of 30.14%, to performance of the S&P 500 of just 15%, so an outperformance of almost exactly 15%, which is really massive and very, very good for me. And all of that I did with these positions. These are all the positions in my North American portfolio. And you see there's a lot of green. Just Wells Fargo and Intel are down right now. And you can find a deeper analysis of every of these businesses on my channel. So just feel free to check out the channel and these videos. And if you find any value on these videos, just subscribe to the channel and join this group of long-term value investors. We are already over 530 people, and this is just growing all the time, and you will get 2 or 3 videos every week. So thanks for watching. That's it for today. Please subscribe to the channel and join me on my road to financial freedom. And if you really like the video, give me a big thumbs up, ring the notification bell to never miss another video. And then we will see you the next time with another analysis of another stock. See you then. Take care. Bye bye.